Opendoor stock closed Friday at $4.45 per share, up 18 cents or about 4.2% on the day. That close was important, not just because it showed strength while the broader market was down, but because it cemented the idea that the $4 range is now a support zone the stock can hold. Aftermarket trading was flat, with the stock giving up just a nickel. For a stock that's been as volatile as Opendoor, that's a sign of healthy consolidation heading into the long weekend. And now, here we are on Tuesday morning, with US markets set to reopen after the Labor Day break. This is always a moment where investors look for direction. Do we carry forward momentum from the previous week, or do we reset and reassess? For Opendoor, the answer might be a little bit of both. On the one hand, the consolidation between $4 and $5 has set the stage for stability. On the other hand, the narrative swirling around the company, from insider buying to retail activism to potential board shakeups, are creating a sense of anticipation that something bigger could be brewing. Let's start with the story that's been hard to ignore, Eric Jackson. For 13 straight days, he stood outside Drake's mansion holding a sign urging the rapper to invest in Opendoor. It was part stunt, part campaign, but entirely effective at keeping Opendoor in the spotlight. That streak ends on Tuesday as Eric moves on from Toronto. But the story doesn't stop there. He's flagged that he'll be calling in at Opendoor's offices while traveling, and there's talk of a potential meeting with interim CEO Shrisha Radhakrishna. Even the possibility of a photo or a quick livestream between Eric and Shrisha is enough to get retail excited, because it would symbolize something deeper, the retail base and leadership acknowledging each other publicly. In a market where perception matters almost as much as fundamentals, that kind of symbolism can move sentiment. Shrisha himself has been a key part of why retail sentiment has stayed so positive. Since stepping in as interim CEO, he's done something that his predecessor struggled with: he's engaged. He's replied to retail questions online, he's leaned into transparency, and most importantly, he's put his own money on the line. His insider buy last week was a moment retail investors had been clamoring for. For months, they wanted to see leadership with skin in the game. Shrisha delivered. And when he followed it up by saying that other board members would soon be investing out of pocket as well, it marked a turning point. This isn't just lip service, it's alignment. It's a board that, for the first time in a while, looks ready to stand shoulder to shoulder with retail. That brings us to Keith Rabois. One of Opendoor's founders, Keith has been increasingly vocal online about what the company should be doing. He's pointed out that retail investors have shined a spotlight on Opendoor's potential, and has emphasized the need for leadership to capitalize on that momentum with better storytelling, stronger execution, and more innovative strategy. For retail investors, hearing Keith echo their concerns is a huge validation. It's no wonder that speculation about his potential return to the board has only grown louder. Even if it's still just speculation, the mere fact that his name is back in the conversation shows how much weight retail puts on founder DNA and entrepreneurial vision. If Keith were to rejoin, it would be a signal that Opendoor is serious about rediscovering its original spark. Now, let's take a step back and look at the bigger picture. Retail, the so-called open army, has proven itself to be more than just chatter. They've acted like a decentralized hedge fund, surfacing ideas, pressing management for change, and keeping Opendoor one of the most talked about tickers online. They've suggested everything from investing more in Google Ads to building a seller agent network that can capture leads outside the iBuying funnel. They've pushed for an asset-light pivot, emphasizing that without sellers there is no real estate market. And they've kept the stock in the cultural conversation in ways that traditional investors simply can't replicate. What makes this moment so fascinating is how these forces are converging. Retail provides the energy, the passion, and the pressure. Shrisha provides the insider alignment and operational credibility. Keith Rabois provides the visionary validation, reminding everyone of what Opendoor can become. Together, they form a trifecta that could genuinely reshape the company's trajectory. And let's not forget the macro environment. Rate cuts are now widely expected later this year, perhaps as soon as September. For a company tied to housing market activity, that's like oxygen. Lower borrowing costs mean more buyers, more sellers, and more transaction volume. If Opendoor continues moving toward an asset-light, platform-driven model, those macro tailwinds could amplify growth dramatically. It's one thing to speculate on vision in a vacuum, it's another to have the wind at your back from macro policy shifts. So what should investors watch for as markets reopen today? First, watch the stock's ability to hold above $4. That's been a solid floor in recent sessions, and holding it would confirm the strength of this new base. Second, watch for any push toward $5. That level has been tested repeatedly, and breaking it decisively would open the door to new momentum. Third, keep an eye on news flow. If Eric Jackson does indeed meet Shrisha, even briefly, expect that photo or livestream to ricochet across social media. It would be a symbolic moment of retail and leadership alignment. Fourth, monitor chatter around board activity. If more insiders step in with purchases, or if Keith Rabois' name gains traction, it could add another layer of bullish sentiment. But perhaps most importantly, remember the bigger picture. This isn't just about day-to-day price swings. It's about a stock in transition. It's about a company being reshaped by forces that don't usually align: retail activism, insider conviction, and founder influence. These are the kinds of ingredients that create inflection points. And while volatility is inevitable, profit-taking will happen, pullbacks will occur, the underlying trajectory feels bullish. So as we head into Tuesday's trade, my view is simple: be patient, be focused, and recognize the alignment taking shape. The stock has consolidated at higher levels. Insiders are buying. Retail remains energized. Keith Rabois is vocal. And Eric Jackson's streak may be ending, but the momentum he created is evolving into something bigger. The question isn't whether Opendoor opens at $450 or $470 this morning. The question is whether the company continues to build on this alignment, capitalize on retail's passion, and position itself for the macro tailwinds ahead. If it does, then today's prices will look like just another step on the road to much higher levels. Eric Jackson's $82 target may sound ambitious, but in a world where insiders, retail, and founders are all pushing in the same direction, it's not unrealistic. It's aspirational, but aspirational targets are how companies move from being volatile trades to transformational investments. So buckle up as markets reopen. The long weekend gave us time to reflect. Now, it's time to see whether the energy, alignment, and vision carry through to the trading floor. For my part, I'm bullish. This is a company that's showing signs of listening, a leadership team that's aligning, and a retail base that refuses to be ignored. That combination doesn't happen often. And when it does, it's worth paying attention to.